Thank you very much, Joan, and a very good morning to Elizabeth, who's in the same time zone as I am, and a very good afternoon to all the others, I think. It's a great pleasure for me to join such an expert group of speakers. Let me therefore begin by thanking The Economist for organizing today's event. Since I cannot possibly hope to address every intricacy of the vast topic at hand here in a few minutes, I hope to provide a bit more of a global perspective on Croatia's post-crisis prospects, so the international perspective, so to speak. But first things first, for Croatia, 2020 has effectively brought a triple shock, I would say. Like so many countries around the world, it suffered, of course, a tragic human loss due to the new COVID virus, and with it, the immense social and economic consequences of necessary restrictions, as already also mentioned by Boris. Furthermore, due to the significance of the tourism sector in the economy, these restrictions have had a disproportionately higher impact in Croatia than in many other countries. That was my second point, the second shock. The first one being COVID, the second one being a larger tourism sector, which affects the impact. And my third point was that, of course, the country had to endure two major earthquakes in Zagreb and the Banija region also, and I would like to express my sincere sympathy to all those affected by these shocks in Croatia. You can hear me now, right, Joan?
Excellent.
Okay.
Yes.
Okay. Economically speaking, what these three shocks have in common, is their exogenous nature. They're outside the country's remit and would have affected the economy independently of the actions of any government that could have interfered. So while they do exert a huge economic impact, they do not determine Croatia's future growth path, which is more dependent on the country's fundamentals. In fact, on these fundamentals, there is ample reason to believe that Croatia will be able to rebound relatively quickly. In the 5 years leading up to the crisis, Croatia experienced robust growth of 2.5% to 3% in line with the euro area, combined with a profitable and well-capitalized banking system, as also highlighted by Boris just now. Unemployment was brought down from over 16% in 2015 to about 6% in 2019, in fact below the euro average. The government deficit was eliminated, the public debt was on a decidedly downward path and stood at around 70% just prior to the crisis. Looking ahead, the IMF, the Commission and the rating agencies all agree that Croatia will be among those European countries with the strongest recovery in 2021. The general consensus is of a rebound of about 5 to 6% in 2021. So apart from the country's solid pre-crisis fundamentals, what other factors make one optimistic about Croatia's economic fundamentals and growth potential? And that's the main point I want to make, and I want to mention three elements which may underpin a certain degree of optimism. First, already mentioned, the EU's Next Generation package. As part of this historic agreement, Croatia is set to receive the second highest amount of grants in per capita terms of over 1,500 euros per person, and these can be complemented by additional soft loans to really drive investments and secure sustainable growth. And the fund's advice on this package is clear: use the money. Use it on productive and growth-enhancing measures to foster the green transition and to drive the economy's digitalization. The funds can and should be used to reach the ambitious targets of the recently published National Development Strategy, notably in the area of climate change mitigation and adaptation. The money can be used to further increase the share of renewable energy from its already impressive 28%, which is significantly above the EU average. The recent public auction of renewable energy projects, for instance, is a good step towards the objective of 36% in 2030. The government's plans to increase the energy efficiency of buildings are equally important, given the relatively outdated building stock. Indeed, investment needs for the green transition are estimated at about 20 billion until 2030, so there is indeed ample room to make efficient use of the European funds. Making effective use of the money will be essential to avoid what our managing director has recently termed the great divergence, and indeed the fund is increasingly cautioning against an uneven recovery across countries that could hamper growth in all countries. And as an open economy with within a single European market, this is all the more important, we feel, for Croatia. My second point, second reason for optimism is Croatia's good reputation among investors. This continued confidence is evident in the confirmation of credit ratings, including the recent upgrade by Moody's, a stable outlook attested by all major rating agencies, and the large oversubscription of the country's recent Eurobond issue. And this is the result of years-long dedication to fiscal responsibility and rebuilding buffers following the global financial crisis. Croatia has shown that it cannot only talk the talk but also walk the walk, and the government's continued commitment is proven by its plans to put debt back on a downward trend in 2021 while ensuring a safe exit from the crisis as well as a stable recovery. Policymakers need to effectively balance risks from growing debt against risks of prematurely withdrawing fiscal support, that's the tension, which could delay the recovery. And against this backdrop, the fund advises to increasingly target support measures where possible. And it's precisely Croatia's proven ability to find this delicate balance that is a strong asset here. And a third reason to be optimistic is Croatia's continued commitment to closer integration with Europe, as also mentioned by the governor. In July, Croatia successfully entered the ERM2, as well as so-called close collaboration with the single supervisory mechanism and participation in the single resolution mechanism. There is a reason the ERM is called the Euro's waiting room, and it's an important step towards adopting the common currency, which would further bind Croatia into the common European destiny. This is a positive sign for Croatia's reputation, its banking sector, and ultimately its economy. Let me also assure you that this is no small feat, as it requires continuously meeting stringent criteria and key macroeconomic variables over a number of years. And it will continue to provide structure to macroeconomic choices in the efforts to foster a green, digital, and inclusive recovery. Continued structural reforms, as also highlighted by the governor, will indeed be essential to enable Croatia to integrate into the euro area and function smoothly thereafter. On this, let me conclude by highlighting my key points. In 2020, Croatia was hit by a triple shock of the COVID pandemic, which was exacerbated by two major earthquakes and the large share of tourism in the economy. Yet, recovery prospects, in our view, are good, as the country can count on solid pre-crisis fundamentals, which are complemented by the eligibility for a large amount of financing from next generation EU funds, the country's good reputation among investors, and third, Croatia's continued commitment to closer integration with Europe. Stop there. Thank you very much.